We have Chuck Lieberman, Chief Investment Officer, Advisors Capital Management. He's also a former economist with the Federal Reserve Bank of New York. He's also been at Morgan Stanley and Chase Manhattan Bank. And also we have Hitha Prabhakar, who has just joined us here at Bloomberg, part of our team to cover the retail industry. And we have Diane Brady, who covers it all for us at Bloomberg Business Week, the new copy now on newsstands. Diane Brady, let's start with you. The retail sales numbers, people were very excited about this because everyone was expecting, based on last week's automobile sales report, that they were going to be lackluster. And the consumer in the United States says, no, we're not dead yet.
Well, and also they were expecting, because of basically gas prices, that people would be staying home. I think the key here is that it's less bad than we expected. And the reality is that there's still not a lot of cause for celebration. Home prices are trending down. That's what people use as their ATM. Household debt is high. So I think people might disagree. But when I go out there and I talk to a lot of certainly CEOs, consumers, there's not that much optimism. I think this could perhaps be what some people call the dead cat bounce. So
I thought you were going to say when you talk to a lot of 5- or 6-year-olds about their spending habits.
And they go to their mothers, and their mothers say it's just, people are still economizing. There's still a lot of nervousness about the economy, about jobs, about the dollar and inflation. So I think we're going to have some cause for worry for some time.
Chuck Lieberman, you don't worry. You hardly ever worry. What's the story and the connection between the U.S. consumer, who, as Diane Brady says, they're watching their pennies, they're concerned about gasoline prices, the home is no longer the ATM, and yet, even though we're not adding a lot of new jobs, we are adding new people to the workforce.
It's amazing how damaging a remark like that people use their ATMs as their cash machines, can be in terms of how people perceive things versus the data. The data shows that the consumer is spending. And the fear was that car sales, which we knew to be down, we knew that because the car companies report that, ignore the fact that the car companies don't have the product because of the problems in Japan. There was a loss of ballpark of 500,000 North American cars in production. So we have less inventory. That means if you want a Japanese car, you have a tough time getting it. You have to also pay up for it. We saw the big decline in car sales attributed directly to the Japanese nameplates. U.S. companies did far better. So you have to look at the data more carefully. You can't just simply take it at face value, car sales are down, and therefore that's indicative of a broader problem. And in fact...
But that was a surprise today, right? I mean, that was the surprise, and that's one of the reasons that people say that the market went up is because they were surprised. They were only looking at the headline auto numbers. And they came out today, they looked at the retail sales, and they said things were pretty good.
And they jumped to the conclusion that because auto sales were down, ignoring the fact that it was due to supply disruptions, because auto sales were down, therefore other sales must be weak too. And so the surprise was everything else was not weak. The underlying trend is actually pretty good. Auto sales are likely to bounce back in a couple of months when the inventory comes back, when production comes back. I don't think things are anywhere near as bad as some people think.
Let's bring Hitha Prabhakar into this conversation. Hitha, explain a little bit about the apparel industry. I know that J.C. Penney looking to tap Ron Johnson of Apple. They want to invigorate the company. What are you seeing in terms of the mainline retailers?
Well, this is exactly what mainline retailers need, is just some change in new management. The mainline retailers have been doing the same thing for a very long time now. So bringing someone in like Ron Johnson is exactly what someone like J.C. Penney needs. Now, we also have to remember that Ron didn't just come from Apple. He also has about 15 years experience behind him from Target. So he having that retail experience of Target's very similar to J.C. Penney in the sense that of the product mix, that some of the target audience and demographic that they're targeting, and marrying that whole technology experience with his experience at Target makes for a really good blend for him to go over to JCPenney and do some great things.
Chuck Lieberman, this idea that we're getting two economies at the same time, one where people have jobs and money to spend, luxury retailers, consumer discretionary items, but that the middle segment of the market, that's still constrained.
I don't think it's quite as constrained as it sounds. 90% of the workforce is employed. The unemployment rate's about 10%, 9%. So most of the population remains employed. Incomes are going up for those people. For the 9% that's unemployed, we're seeing significant job turnover. Every week we get a large number of new unemployment claims. We also have a lot of people being hired. So there is turnover taking place. Slowly but surely, the economy is grinding ahead. what we've seen is a temporary bump in the road. We have some soft economic data. It flows through all the data and give us a little time, and I think we'll see better numbers.
I knew you'd not worry. All right. Chuck Lieberman, Diane, Brady, Hitha, Prabhakar, thank you very much for your insights.